What's up, guys? I welcome you in this wonderful video. So there is something important that I want to share with you. I've made a lot of videos in the past where I explain how I enter the trades, how I analyze the corrective waves. But in majority of those videos, I usually use the flag pattern as an illustration. For example, an impulsive and then a corrective and then an impulsive again. So when I speak about corrective waves, I usually use the flag pattern because it is easy for traders to understand. However, it is not always where the market will correct in a form of a flag pattern or any other observable pattern. Sometimes the market will correct in a way that is not a pattern or in a way that you can't easily understand as a trader. For an example here, we can see we have an impulsive and then the market enters in a corrective and an impulsive again and another corrective again, and none of these two correctives look similar to the flag pattern up there. So I'm just here trying to explain how to enter the market when it is correcting in a way or in a form that is not a pattern, or that is not a pattern that you know. So let us just get into it. What you have to pay attention into as a trader, because here it's an uptrend. If it's an uptrend, then we are looking for one thing and one thing only, which is buying opportunities. And where do we get these buying opportunities? We get these buying opportunities from buyers showing us signs of strength. So we're looking for signs of strength when it comes to the buyer's side. We don't care much about the sellers because we already know that the sellers are weak because of an uptrend. If it's an uptrend, already the sellers are weak. So what we are looking for, we're looking for the right time to continue with this buyer's move. So what matters the most in a corrective wave, let's say the market is moving in an impulsive and then it starts to enter in a corrective wave, what you have to pay attention into, it is the last record of the buyers. For an example, the last high or the most highest point. In this case, it was this point, and this is the point that's going to determine if, okay, now we are ready to go. For an example, you'll see the market starting to go down in a corrective, starting to go down, and the more this high is the more you pay attention into this high, you have to also wait for other highs to be formed. For an example, you have this one, which is a little bit lower than the previous one, and already, because you can see a high which is a little bit lower than the previous one, you can already maybe try to figure out how the corrective is flowing. Because when you're analyzing a trend, you have to analyze the trend on its bigger size. For an example, you can draw your trend lines wherever you decide to draw them, and then you have to go deeper into the corrective wave, because this is where you're going to enter your trades. You're not going to just look at the trend and then enter. You have to enter your trade from a corrective wave. Then that's when you have to get into details of how the corrective wave is structured. What are the signs of strength? What is the momentum? How is the momentum changing in the corrective wave? So as you observe your highest point, which is the most point that you're so much concerned about, which is the highest point of the bias, because that resembles their most recent strength. So you pay attention to the most highest point, and then as it is going down, you pay attention again to the next high. How are the highs related? In this case, they are going lower. Obviously, it's a corrective wave. We are expecting that. And then when the market gives you another high, you even pay attention into that high again. So now you have three highs. They're becoming lower and lower. So you know that immediately when the market breaks one of these highs, you know that, okay, now it's maybe time for us buyers to kick in. But you are not just gonna buy from there. You have to make sure that you wait for other confirmations as well. So we can see here that here was our high, was our last high, and then it was broken here. However, you can't just enter excuse me, you can't just enter from this breakout without considering any other factors. For an example, you can see this breakout, you have to consider this low. How is this low related to the other lows? You can see that they're becoming lower and they're becoming lower. However, this one, the current one, let me just remove this few drawings. The current one, as you can see, you can kind of extend your straight line. Let's say we put it here, and you can see that it almost bounced higher than the previous one, meaning, okay, even in this case, the bars, they showed us that, okay, they are now coming back. Why? Because they didn't do what they did previously. What did they do previously? They give us a low which is lower than the previous one. However, now we've received a low which is no longer lower than the previous one. So this low is no longer lower than the previous one. However, this one is lower than that one. So in this transition, or in this move, the sellers were showing some kind of strength. However, in this cycle, the sellers were no longer showing some kind of strength. It was only now the buyers which were showing some kind of strength. Then from here, you can observe that, okay, wow, we have something interesting. And if you want to take it a step further, you can wait for another confirmation. For example, here we have that smaller high. And we zoom in with that smaller high, which took place in the exact same point as that previous one. And then if the sellers were still trying to push further, they were going to push this move all the way down. They were going to push this move all the way down. However, they failed to push this move all the way down. And then that's when you can say, okay, now I'm boldly executing a buying trade from there. So I hope that is making sense. So you had two options, either to enter here because you observe the breakout and this sign of momentum here. You didn't just enter because of the breakout only. That's the mistake that you should avoid. Don't enter because of the breakout only. Make sure that there is something to back up that breakout. So here again, in the last example that I'm gonna give to you, here again with the highest point here that we have to pay attention into, and then observe the next highs. You can see that they're almost at the same level, and then we have the next high which is becoming lower. However, if you observe on the seller side, you can see that, okay, wow, the sellers, they were kind of displaying some kind of strength because this low and the next low, they're now becoming lower and lower and lower. But however, we have something interesting now here, which is a low which is no longer lower than the previous ones, but it is now getting higher. So once you observe this, your next wait is to wait for the high and see if it's gonna be higher than the previous one, which fortunately it became higher than the previous one. And once you have this cycle complete, a higher high and a higher low, then there is nothing that you should wait for as a trader. You should press that buy button with confidence. So that's how you should observe this kind of corrective waves, guys. It's not a matter of drawing your flag patterns or whatsoever. If a flag pattern is not there, it doesn't mean that there isn't any interpretable structures. So observe the highs and the lows. That's the point of analysis. And even patterns, they are formed from connecting highs and lows of that particular wave. Then you come out with a pattern. So that's what you should do, guys, in this scenario. So I'm just gonna keep it short and leave it here. Thank you for watching.